Well, holy smokes, everyone. Two major critical real estate firms just collapsed overnight, leaving people homeless. Everything we've been talking about and warning about on the channel is now happening in real time. It is no longer speculation, people. We are in a financial crisis right now. So you need to understand, who are these two companies that just went bust? How and why did they go bust? And what is it going to lead to for the broader economy? Because people, imagine one day you're staying in your apartment or your hotel, and then all of a sudden they sound the alarms and tell everybody you have to get out. We're switching off the lights, we're switching off the power, we have no more money, we're going out of business. Well, this exact scenario just became a reality for thousands of people. So everyone, let's not waste any time, let's get straight into the news, the facts, and the data. Well, everyone, look at this. Like I said, this is not clickbait, this is happening now. Marriott guests left homeless as rental company Sonder abruptly goes out of business and deal with hotel terminated, and some people said they treated us so poorly. So that's exactly right. And again, this is just the first company. I'm going to show you another real estate firm that just went bust that is even bigger than this. And then I'm also going to show you what's happening in the financial markets that are sending us warning signs and signals to say something is very, very wrong. So let's dive deep into this report. Well, Sonder was founded in 2014 and had 9,000 units worldwide, with hub cities in Denver, San Francisco, Montreal, London, and Amsterdam, according to the now defunct company's website. So that's exactly right, everyone. This is a major company, not a small commercial real estate company at all. This is a big player, and this is going to have big domino effects in the markets. So can you imagine this, people? Hotel guests around the world were left homeless when they were evicted from their rentals with only hours of notice, after Montreal-backed chain Sonder filed for bankruptcy, creating a vacation nightmare for thousands. So that's exactly right, everyone. Can you imagine being one of these thousands of people? You're sleeping in your hotel, trying to have, a nice peaceful holiday to get away from, all the chaos, all the stresses of life, only for reality to hit you in the face, and then this company tell you, guess what, everybody? You all have to leave. This is why I tried to warn people far in advance, and then people are like, oh, look, you've been warning about some kind of crisis happening, or some kind of market event happening, but nothing happens. Well, it's because these type of events take at least 12 to 24 months for them to actually materialize once we get the data. And guess what, people? It's now materializing at an alarming rate. So Sonder Holdings Inc. announced an immediate wind down of operations on Monday after filing for Chapter 7 bankruptcy, initiating a liquidation of its US businesses and beginning insolvency proceedings overseas. So this isn't just one hotel going down, this is going to lead to domino effects for many other hotels going bust as well. And what have we been saying on the channel lately, people? I've been warning that commercial real estate will cause the next global financial crisis, because a lot of these companies took on huge amounts of debt during 2020 when interest rates were zero. Now interest rates have skyrocketed, they're no longer profitable, and they're going to go bust. And this is just the first domino to fall. So Marriott terminated its licensing agreement with San Francisco's based company on Sunday after the apartment-style accommodations defaulted on its August 2024 agreement. Now again, this is just one company. Wait till you see the next one I'm going to show you after this and what's happening in the bond market. Now, as we can see here, this is absolutely devastating. Again, imagine you're there thinking you're safe, staying in your room, and then all of a sudden you're left to go on the streets. And I think this picture is going to become a lot more common in 2026. So Steve McCraw, a retired tech executive, was in the middle of a 17-day stay in New York City with his wife and daughter and newborn granddaughter at the Sonder Battery Park Apartments in a financial district when the company abruptly went out of business. The family booked their trip through Marriott before receiving alerts on Monday that they were being kicked out of the rental a week into their stay. McGraw and his family had until 9 a.m. Tuesday to leave the building and doled out thousands of dollars in their desperate search to finish their trip. So this is absolutely devastating, people. He said, we ended up spending several $1,000s more to find a new place. It was very disruptive and they treated us so poorly. And so now what is Marriott saying on this situation? Well, Marriott's immediate priority is supporting guests currently staying at Sonder properties and those with upcoming reservations, the hotel chain said in a statement. Marriott remains committed to minimizing disruptions to guests and travel plans. Well, it's kind of too late for that. Now, it's not just the guests that were staying at the hotel. all these employees that were employed by this hotel were abruptly laid off as well. So news of Sunday's termination and subsequent bankruptcy filings caught Sonder employees by surprise as they were left in the dark when confronted by frustrated guests, another TikTok user revealed after leaving their New York City rental apartment. And just in, Sonder has finally released a statement. They said, "We are devastated to reach a point where liquidation is the only viable path forward," CEO Jenna Sears said. "Unfortunately, our integration with Marriott International was substantially delayed due to unexpected challenges in aligning our technology frameworks, resulting in significant unanticipated integration costs, as well as sharp decline in revenue arising from Sonder's participation in Marriott's Bonvoy reservation system." So again, it's all the blame game here. They're blaming it on Marriott. Marriott is blaming it on Sonder's. But what we really need to know is these commercial real estate properties are underwater, and simply many of these owners are going to walk away, and it's going to be the big banks that are going to have to take the hit. So just exactly how big of a hit is this going to be for the banks? Well, let's keep reading. So these issues persisted and contributed to a substantial and material loss in working capital. We explored all viable alternatives to this outcome, but we were left with no choice other than to proceed with an immediate wind down of our operations and liquidation of our assets. The company, which offers refurbished properties for short-term rentals and was once a rival to Airbnb, went public in 2021 at a valuation of $2.2 billion. So this is no small player run. This is a major player, but again, we just got news of another major real estate company going bust. So look at this, everyone. This is absolutely crazy. $2 billion Ritz-Carlton Paradise Valley developer files for bankruptcy. So again, are you starting to see the dominoes are falling, and it's accelerating, and they're falling quick? So Madison had been pursuing a November foreclosure sale for the installed development. So this caused multiple entities connected to 5-star development to file for bankruptcy protection on November 4th in the Southern District of Texas. The company reported estimate assets between $500 million and $1 billion against estimated liabilities between $500 million and $1 billion, according to bankruptcy documents. So again, these are just two companies, but all these losses they're facing, that would have been someone else's income. That would be the bank's income on these loans. That will be the employee's income. That will be the construction worker's income. This is going to cause a ripple effect throughout the whole economy. So Madison had been pursuing a November foreclosure sale for the installed development, alleging the 5-star has defaulted on $585 million construction loan tied to the project. 5-star filed a lawsuit against Madison in May, alleging that the lender has undermined it in an effort to take control of the property. A flurry of claims have gone back and forth in the intervening months. So again, these are just two companies, but what if we could actually look at the markets to see if there's any signals that there's going to be much more trouble ahead for many other companies? Because people, the warning signs have never been louder, and you simply can't ignore it any longer. So look at this. Fear is coming back to the junk bond market. This means a lot of companies' debt is being downgraded to junk, and a lot of the premiums, a lot of the risk premium for these bonds are rising at an unprecedented pace. This is a warning signal to tell you that these banks that normally buy these bonds, or these investors that buy these bonds, are very, very worried. So what exactly do they know that we don't? So I'll go ahead and bring up this chart here. Look at this. They said there is a greater level of caution at the first whiff of potential problems right now. We can see this chart here, returns lag for riskiest high yield debt. We can see the yellow line here, that's CCC index. The black line here is the all high yield index, and the gray is the double B index. It says here, some market watchers point out that investors aren't necessarily avoiding all CCC bonds, but rather credits that have been downgraded to CCC recently and are on a downward trajectory. So that's exactly right, everyone. It's not just that investors are worried about investing in these and these bonds have been falling in price. It's a lot of these debt, like these real estate companies that may have had high rated bonds before a couple of years ago. Their bonds, their debt is being downgraded massively, and this is leading to the rise in CCC rated bonds. Now, the reason why we have to pay attention to this is because this is exactly what happened during the subprime mortgage crisis in 2008. But the difference this time won't be residential mortgages that causes the crisis. It will be these commercial mortgage-backed securities. If we dive a bit deeper, it says distressed bond supply has swung wildly this year, climbing to 100 billion in April from 50 billion in January. And guess what? When we get the report for late this year, I think it's going to blow your mind. October marked the second straight month of increasing supply, hovering at around 72 billion. While still relatively benign, previous breakouts in distressed supply from troughs have signaled the start of a notable bout of risk aversion. Exactly right, everyone. It has started. You know what's even crazier? Right as we're having all this chaos happening, right when all these companies are going bankrupt, when layoffs are spiking, the White House just said it may never release its October jobs and inflation data. Why are they doing that? What exactly are they trying to cover up? Well, I think it's very, very obvious. We're seeing layoffs skyrocket to levels not seen since 2003, and inflation is running away. Because what the markets have been betting on is that the Federal Reserve would be able to lower interest rates to zero, and then all these commercial real estate companies that have all this high interest rate debt would be able to finance, they'll be able to extend and pretend, and everything will be okay. But the problem is, inflation is not going away. It's getting worse, and this is going to lead to stagflation. That's where you have high inflation and high unemployment. And there's absolutely nothing the central bank can do unless they do the unthinkable. They ignore inflation, keep on printing money, bail out all these institutions, but then the dollar will become worthless. So everyone, these are definitely very unprecedented and troubling times we're living right now. So how can we protect ourselves and prepare for what's already happening? Well, everyone, if you haven't been already, you don't want to be like these real estate companies. You don't want to have all this high interest rate debt. So you need to pay off debt before you start thinking about investing. Don't invest when you've got debt, because when a crisis happens, you're going to have to sell those assets for pennies on the dollar just to pay that debt. Then once you've paid off debt, again, don't invest. You need an emergency fund, so you don't become like one of these real estate companies that go bust. You need to have minimum 3 months, but really you want 6 months. Only then can you begin to start investing. And a lot of people have, there's a few trolls. Most of you are great, but they say, look, if I listen to you, you always say a crash is coming, wouldn't have made any money. Well, have you seen the performance of gold? Gold is up over 100% since I've been telling people to buy it at around $1,800 an ounce. Been telling people to buy Bitcoin around $30,000, and it went up to $125,000. Now I think Bitcoin is at the peak and we're going to be facing a bear market. So I wouldn't be allocating any more capital to Bitcoin, but if you have some, you don't need a panic sell. And of course, silver has been doing very well as well. Just another way to diversify your portfolio. And even like I've been warning about, a lot of commodity stocks, a lot of mining stocks, for example, the GDXJ index that I've been telling people, is a good buy, is up over 80% this year. So for all my viewers that have actually listened, you've massively outperformed the stock market. But everyone, what do you think about this? What do you think about this craziness where companies are going bust, it seems like every day now? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.